Welcome back. Turning now to today's Market Navigator. It is August. It's the start of the 2-month period where Wall Street typically has its worst performance of the year. But are there certain sectors or types of stocks that could buck that trend this time around? My next guest says yes. He's here to fill us in on his picks. Joining us now is Jay Hatfield. He's the CEO and CIO at Infrastructure Capital Advisors. Jay, it's great to have you on, and let's start right there. What are you looking at? What do you like in this market environment?
Thanks, Morgan. It's great to be back. As you mentioned, really throughout the segment, it is a more problematic time of year. We're more neutral on the market than negative. We have a 6,600 target, and we think we'll probably exceed that target. But the big point is by year end, not during the fall. So it's good to have a diversified portfolio. And so some of our funds are more dividend focused. And so, for instance, in our AMZA fund or pipeline fund, one of our biggest overweights is LNG, Cheniere. They're the biggest exporter of LNG in the United States, only a 0.6 beta stock. So, for instance, on Friday, it was actually up when all the tech stocks are getting smoked. And by the way, other high beta stocks like financials, Goldman, Morgan, we also hold some of those in our ICAP fund. But so defensive, great long-term growth story, underappreciated. Natural gas is the critical transition fuel. Our natural gas is 80% cheaper than the rest of the world. It's going to be exported. And then finally, the president and his team is out there promoting U.S. exports. And the easiest thing for other countries to agree to is to buy a product that's 80% cheaper than the rest of the world. So that we think that's an additional growth driver, not that there needs to be a whole lot more tailwinds on the natural gas export business. Yeah, energy and also weapons. Defense seems to be one of those negotiating tools as well in terms of the trade dynamics. I've been hearing a lot from investors that we're seeing a bifurcation in the market. Do you see it the same way? And if so, what does it take for some of these, for example, dividend players to catch up to some of the high flyers? Well, there's an easy indicator. If you want to know whether it's a tech day or old economy / dividend stock day, just look at interest rates. That's the best indicator. So for instance, say small caps are actually up there, interest rate sensitive because they own a lot of utilities and REITs and other interest rate sectors. So I would follow that. We are bullish on rates. We have a 375 target on the 10-year. So we do think that these old economy stocks and dividend stocks will perform well. It's just that if the market's way higher, of course, tech stocks will outperform, but they have much higher risk. Like most tech stocks have twice the risk of the market, and most of the conservative stocks, at least we're talking about today, are half or less. Okay. Jay Hatfield, thank you for joining me. Thanks, Morgan.